Good morning, everyone. Thank you once again for attending Cornerstone Senior Marketing's annual roadshow. Again, we wish this would be in person, but with the COVID situation and to keep everybody safe, we're doing this again virtual once again. But very, very excited to have one of our guest speakers today, Janet Trautwein with the National Association of Health Underwriters. But before I go into introducing Janet, as she's going through her presentation, you'll see on the right-hand side there's a chat feature. You can put if you got questions in there, you can put that in the chat feature. If you have specific questions for Janet, you can put that in the Q&A side of things as well. We will be monitoring those, and we'll ask Janet those questions at the end of the presentation. And I do want to recommend one thing. If you're not familiar with the National Association of Health Underwriters, I always try to let you know or give you a little bit of plug about the National Association of Health Underwriters. This is an organization that is here that protects us, the agents and brokers, and they're doing a fantastic job being the voice for us. So if you're not a member of the National Association of Health Underwriters, I would strongly encourage that you do. Specifically with a lot of new legislation out there that what Janet's going to talk about, it could drastically change our great business that we're involved in today. So as much support as we can get agents to join, it would be greatly appreciated. With that, I wanted to introduce Janet. Janet is the Chief Executive Officer of NAHU and President of the NAHU Education Foundation in Washington, D.C. NAHU represents employee benefit professionals involved in the design, implementation, and management of health plans all over the United States. Her responsibilities include oversight of all the NAHU and NAHU Education Foundation activities, including oversight of 30 staff members in Washington, D.C., and 210 state and local chapters. She is the primary spokesperson for NAHU to the media, government agencies, and elected officials at all levels. A frequent speaker of health policy issues, Janet's expertise in issues related to health insurance markets, the uninsured risk, and reinsurance pooling, benefits, tax-related, and tax-preferred account issues, and both national and global health reform has been recognized throughout the industry. Janet has testified before Congress numerous times, has been published in major news outlets, and has appeared on hundreds of radio and television programs around the world. So it is with great pleasure I introduce Janet Trautwein. Janet, welcome.
Thank you. So glad to be able to talk to all of your listeners today. We have a lot to talk about. I'm just going to be focusing, obviously I'm going to talk about Medicare issues, both legislative and a couple of regulatory things. But I also want to talk about some few things that you all hear a lot about to make sure everybody has the right information. And those have to do with Medicare for all, public option, and so forth. Because a lot of people, both I think brokers as well as people that are covered by Medicare, they hear about some of these proposals and they have Medicare in the name and they think, oh, that must mean that that's good because I like the way my Medicare works for me or my Medicare Advantage. And so a lot of these proposals use the name, but it's nothing like what we have today. So I'm going to talk a little bit about that and I'm going to jump right in. So first I'm going to start off telling you something that you all already know, but I want to put it in the context of what I'm going to talk about today. And that is that, we're seeing changes in the Medicare program. I would say for some of them, it's about time, and others, we shouldn't be shocked whether the change is the way we want it to be or not, because, originally when the Medicare program was put together back in 1965, the whole way that people were covered for their health care needs was entirely different. Most people had a base plus major medical policy, so they had hospital charges covered under one type of coverage and outpatient charges and doctor's visits and so forth covered by something else. And that's how Part A and Part B came about being separate the way they are today. And then that was, of course, originally we had Medigap to pick up what wasn't covered by the regular Medicare program. And then over the years, we've had different things offered. We added on Medicare Part C, which we know as Medicare Advantage. The Medicare Advantage market is growing like wildfire. It's now 40% of the market, and it's growing at about 2 to 3% a year. And then we have, of course, Part D that occurred with in conjunction with the Medicare Modernization Act, and then all the variations of all of that. I'm not going to read everything that's on the screen, but there have been a lot of changes, and the program has become much more expensive in terms of just the program itself. So we would expect that there would be changes to try to rein in some of the cost, but also to make sure that people are able to get the benefits that they need. So some of the things driving some of the changes, we had, the MACRA law / regulation that had to do with Medicare supplements. And if you've been in the business for a while, you've probably noticed that in the area of supplements, there's a lot more cost sharing with Medicare supplements than there used to be. You can't really cover, unless someone has a supplement that they've had for a long time, that they're able just to continue on. If you wanted to buy a new supplement or you're newly eligible, you're not going to be able to have the same choices that a person had before. Now you've got some additional choices, but all of them have more cost sharing. And that's something that's been driven by Congress to try to push down the primarily Republicans in Congress, by the way, to try to push down the cost of the overall Medicare program. And we now have additional costs into the Medicare system. We have end-stage renal disease that's covered by Medicare Advantage, and that we've got to look to see what the ultimate cost will be relative to Medicare Advantage plans and if that will increase their overall costs. And then we have overall Medicare inflation, the great new blockbuster drugs that we have, prescription drugs, but which are not free. And there's a cost associated with them. And then we've had everything associated with COVID-19. So lots of different changes. The way people are forced to access their health care. And remember that, Medicare and every health insurance that we have is just the way we finance our health care needs. So I want to talk about how all of this change factors in with politics, because as we look at changes that come up and we try to figure out what's going to happen next, we have to understand that, what the right thing to do is, and what the logical thing to do would be, is all interwoven when politicians make decisions on this with the politics of the situation and the ability of the changes they make to serve people, but also will they make a change that will cause them to either be not reelected or to be reelected. And I don't mean to make politicians sound like they're all greedy, and because that's not true at all. Most of them are regular people like you and me, but they do, in order to get the things done that they want to get done, they have to be reelected. So that every decision they make is woven in with this idea: will it affect my reelection possibilities? But there have been a lot of increases in the current system that we have. The costs have gone up and up, and frustration with, higher deductibles, people having trouble accessing coverage has led to a lot of these new proposals. And I want to talk about a couple of those first, most of which have Medicare in the name, and none of which really have too much to do with the Medicare program itself. So there's Medicare for All, there's the public option proposals, because your clients are probably asking you about these. So we thought we'd talk about a little bit about what they are, so that as they ask you the questions, you would be more educated on what these programs really mean. The buy-in proposals to Medicare. The newest one is lowering the Medicare eligibility age, and all of these have been introduced in Congress. And one of the interesting things about these programs is that would be designed to be, some of them, not Medicare for All, but some of the others would be designed to be offered alongside privately offered plans, which have to negotiate prices with medical providers, as opposed to public programs, which can mandate that medical providers be paid a certain rate, which, like the Medicare rate, which is significantly lower than what they're paid by other payers. So it's really tough to say, okay, you're all going to compete with each other, but it's an unlevel playing field. These health plans can make providers pay the lowest or pay providers the lowest possible amount, and the other programs can't. You create this unlevel playing field, and then what that does is it sort of creates some adverse selection that pushes the private players out of the market. So it's very dangerous. That's my point. To do this, it's an unfair advantage. And I want to show you one other thing to express why people are so interested in doing this. This slide is interesting only for the black line at the top and the other multicolored lines that are below that. So the top black line there shows United States healthcare spending relative to the other developed countries that we're familiar with, European countries like Australia and so forth, and as well as Canada. They all spend less than we do for a variety of reasons. Mostly it's because the unit cost of care in the United States is so much higher than it is there. And that's because the government doesn't set prices in the United States like it does in some of these other countries. And so that's why theirs is lower. We don't actually use more care here. In fact, our hospital days are lower than many of these other countries, but they can charge less. There's a lot of things that factor into that. Their providers can take less because their medical education is largely paid for by the government, so they don't have come out of medical school with big student loans. And also people aren't kind of lawsuit happy like they are in the United States, so they don't have to carry as much malpractice insurance. There are laws about how much they are required to carry and what the maximum possible lawsuit could be. So I just wanted to show you those costs are what's driving a lot of this interest in all of this, to try to, if they continue up on that trajectory, obviously that's an unsustainable trajectory. So these proposals that have been put forth kind of fall into three categories: the big replacement type option, the Medicare for All, the ones where you're buying into the Medicare program, and then ones where it's a public option. And you hear that term a lot. Most Democrats are not in favor of Medicare for All, but there are a pretty sizable group that are, but the majority want to improve the Affordable Care Act, but they consider a public option to be an improvement, and it still creates this unlevel playing field. So I wanted to talk a little bit in general about what these types are. There are a number of different bills that have been introduced in each category. There's the complete replacement programs. They call it Medicare for All, but it's not the Medicare program at all. It's more like the Canadian system, except it's worse than the Canadian system. We've all heard about the waiting lines for medical care that we see in Canada's system. So this one, this system would allow no private coverage or supplemental coverage at all. The government would be in charge of all of the pricing. They would use a global budgeting process. And the way they have it structured, it most certainly would result in waiting lists for the medical care that we want. Now, theoretically, everything would be covered under this new program, but the current Medicare program would go away. The Medicare Advantage would go away. Medicaid would go away. All of the employer-sponsored coverage, everything would go away and would be replaced by this new program. And all medical providers would be paid something akin to today's Medicare rates, except that would come through. Some of it wouldn't be on, particularly for hospitals, would not be on a fee-for-service basis. It would be a pot of money that had to be budgeted to last the entire year. That's where waiting lists come from in other countries. This is global budgeting process, and it's based on pricing that is too low to accommodate the demand. So that's something that we've been very opposed to. And then the public option proposals, as I said earlier, a lot of Democrats think they like the idea of a public option. There are many different versions of this. Some of them are run by the federal government. Some of them are envision that somebody like a big carrier would run it, even though it would be a government program. It wouldn't be like the carrier would be the claims payer for the program. And some of them proposals are only for the individual market. Some of them theoretically alongside other private coverage, and it would be eligible for the premium tax credit the same way others are. And then others include a small employer market. There's one of them that extends to the large employer market too. And they're usually packaged with other things, some of which you would like and some that you wouldn't like, different other things in there. And then the Medicare buy-in proposals, these actually create a buy-in for the current Medicare program. Depending on the proposal, sometimes it includes Medicare Advantage and others don't. Most of these proposals allow people to opt out of their employer-sponsored coverage and into this program instead, and it's not clear whether the employer has to pay for the people who opt out or whether they would be eligible for a tax credit even if they had a valid offer of employer-sponsored coverage. It's completely unclear that there's a role for brokers. It's also really unclear how they would price this. Whether these people would be pooled in with everybody that's under the current Medicare program, or whether they would have their own pool. You would think that a pool that's only of people that are either 50 to 64 or 50 to 100, for example, that would not be the most attractive pool to develop your rates off of, but it's unclear on how they calculate the rates. So, and also remember that the medical costs would be lower under a program like this because providers would be paid Medicare rates. So again, it sets up an unlevel playing field, and it's not a good idea. And the final one, and this is the one I would say, if you asked me, we can talk about the politics of the whole situation, about the chances of these passing. The one that has the greatest chance of passing is an actual change to Medicare eligibility, where they allow people to buy in at either 60 or 62, but it's not the same kind of buy-in as the other because they're actually eligible at that age, and there's just a cost associated with it, which is different from the buy-in that was described earlier. It's different in the way it's budgeted through the congressional budgeting process and so forth. And it's people would be able to opt out of their employer-sponsored coverage for this. Again, it's unclear how any firewalls that would be set up. This is talked about during the Biden presidential campaign. It's also being discussed a lot right now by Bernie Sanders and a few other of his colleagues, but they're really trying to get that through one of the budget reconciliation bills, and they're trying to figure out prioritizing which of the things they want to do the most. This is really being talked about a lot right now. It is completely unclear that you as a Medicare broker would be able to be associated with this or not, or whether it would be Medicare Advantage or just the original Medicare program or not. And then the only other thing on this subject that I want to point out to you is that on these public option proposals, you're seeing a lot of these proposals at the state level. They're much easier to pass at the state level than they are at the federal level. We've got them in a couple of states so far. We have proposals in many other states, and they can really be disruptive to the market. What we try to do in our lobbying efforts is to water down the proposal so that they have the least market impact. First, we try not to get them to pass at all. And then if that doesn't work, then we try to make them the least damaging to the market as we can by modifying the provisions of the coverage through a negotiation process. So in closing on this particular portion of what I'm going to talk about today, the results of any of these is that they pay providers Medicare rates. So it causes your medical providers, if you think of providers that are, let's talk about your doctors, first of all. If you have a doctor that is even remotely considering retiring or is even within 10 years of retirement age, and all of a sudden all of his payer base turns to being paid Medicare rates, they might seriously consider whether retiring early is a better idea. So first of all, we're going to see some providers drop out. And we've seen particularly some studies that show that in rural areas, it's the most significant problem. and that some hospitals would have to shut their doors. And the reason is right now they have a mix of payers, and if just to show a contrast with that is a commercial insurer's rate, even at the best possible rate that they've negotiated, is going to be about 80 or 90% higher than what the Medicare payment rate is. But it's really very, very common to see a lot of services that are 800 or 900% higher. So if you think about the impact on the providers, right now they spread it out by having these different kinds of payer rates, but they probably couldn't sustain themselves given their cost basis if everyone were paying Medicare rates. And so what happens is they either have to limit the number of people that they take under a certain type of policy, they increase waiting times for services, which is what we see in a lot of other countries, these waiting lists, or they're just strictly unable to meet the demand, and people are waiting for things that in our country we haven't had to wait for before, not anything significantly. So what will any of this happen? Right now, Democrats control the House, Senate, and the White House, but we have very narrow margins between the parties, so it's very difficult for them to pass something too dramatic. So they're not going to be able to pass something like Medicare for all. It's just not possible. The public options would be difficult. The Medicare buy-ins or the changes to Medicare eligibility would be the easiest for them to get through their parliamentary procedure process. And we'll see where they put it on their priority list. There's a lot of things that they want to do. Some of you are probably familiar with the fact that the way subsidies in the individual market are calculated have changed, and most Democrats want to make that permanent. That may be a priority that they hold to be higher, and the cost associated with doing that might be more important to them than doing the public option change. It just depends. So we have to watch it very carefully. And so my point, I wanted to make sure you all are aware of what these are. They all say they're Medicare, and none of them are Medicare, except for the Medicare ones that I pointed out to you. Okay, so I do want you to watch, particularly if you're in Washington State, any of you, or if you're in Nevada, you know that you have a public option there, and it's really been, it's really been watered down a lot. It's actually offered through private carriers there, but it's not necessarily. It still has the ability to be very disruptive to markets, and we're trying to stop it in other states. So in terms of our priorities moving forward, I want to talk to you about a couple of the things that we're working on. First of all, I know that some of you have probably experienced this problem, and I think I've talked to you about it before. COBRA is creditable coverage. There is people work a lot longer today than they used to. I mean, I have one employee that's over the age of 70. I have a couple that are over the age of 65, and I don't think they're stopping anytime soon. There may be some point when they reduce their hours and they go on COBRA, or let's say someone did leave and went on COBRA. Largely, they're going to look at that COBRA coverage as their employer's plan still, even though under Medicare rules, as soon as they go on COBRA, it's considered to be the same thing as like an individual market policy would be, and it triggers their Part B open enrollment period. A lot of them aren't aware of this, and what happens is they lose their opportunity to enroll on a timely basis in Part B and D as well, but Part B is extremely onerous, and they end up with a lifetime penalty as a late enrollee in Part B. And it's really sad that this happens, and we have been working to try to change that. We have a lot of bipartisan support for making the change. It's a matter of it being prioritized with all the things that they're working on. But we have a lot of interest in it right now, so we're hoping that we can finally push it over the finish line this year and get that taken care of so that people don't get stuck in that trap anymore. A similar trap is the observation status trap. A lot of times a person might come in through the emergency room, be put in what feels like an inpatient bed in the hospital, but they might not even know that they've been classified as observation status. When it's time to go home, they may have not be ready to go directly home. They might need to be released into a skilled nursing facility. But if they have not been, as you all know, in order to have Medicare cover skilled nursing, you have to have a 3-day inpatient stay prior to that. And if someone's been in observation status, that does not meet that qualification. So that's something else we want to change. Now, interestingly enough, during the pandemic period, that this was changed on a regulatory basis to not have that problem, so that people would not experience that during this time. We want to make this permanent, and now that we've had this period of time where we have been able to kind of experiment with it without it becoming a permanent law, it's much more likely to push it through. So I'm pretty sure that this one is also going to go through this year. We have a lot of support, bipartisan, on this one as well. So it's not a heated partisan type issue. So that those types of things are much easier to get passed. And this is just some additional statistics that show about the people who are affected most by this issue on observation status. And this is one of the things that Congress is really looking at. They're really looking at all types of disparities in healthcare and social determinants of health. And so they're really concerned that this disproportionately affects people that are lower income or they might live in rural areas and so forth. Another thing that we are looking at is we have seen end-stage renal disease that is potentially impacting the overall cost of Medicare Advantage. This is something that we are just watching really carefully. I assume that most of you are aware of this, but the ESRD coverage excludes transplants, but often, treatments for dialysis and so forth often exceed $100,000 a year. As we look at the funding gap between what Medicare Advantage carriers are paid versus the new expense associated just with this, it runs about $10,000 to $12,000 per ESRD patient annually. So it really, I guess it depends on how many each carrier gets, but we are watching this really carefully to see if action needs to be taken relative to this one. And then I know that so a lot of you are familiar with the Part D senior savings model relative to the cost of insulin and the ability for people to get into this senior savings program, and which is it's not available universally, but it's fairly widely available, and the ability for seniors to only pay $35 a month for their insulin. The issue is the biggest issue is people who have used insulin pumps, which don't come under this ability to participate in this senior savings program. So we're trying to make sure that gets changed so that people who are using an insulin pump would also be able to take advantage of this special pricing under the senior savings model. And we're working on it. It's kind of an in-process thing. We're trying to take care of this on a regulatory basis, which is faster. And then I want to mention something that I think is really important. It has to do with Medicare solvency. I know many of you have probably heard that Medicare is projected to become insolvent in 3 to 4 years. So the first thing I want to say relative to this is that Medicare is not going to actually become insolvent. If Congress didn't work on another single thing, they would never, ever let Medicare become insolvent. And the reason for that, there's two reasons. One, a lot of people would be so negatively affected by it, including many members of Congress. But also, for those that have any sort of political ambition at all, seniors are the largest voting bloc in this country. They vote consistently, and there's a lot of them. And politicians would do anything to avoid Medicare insolvency. They would cut any program rather than let the Medicare program become insolvent. So they will address it, but we'll look at this. It'll become a catalyst for doing other things, and we're already seeing some action on some of those. For example, some of the things that Congress is working on right now involve adding some additional benefits to the Medicare program, and it has to do really with this overall look at the Medicare program, solvency, and other issues. But we're likely to see some of those happen this year ahead of the time that they address this Medicare solvency issue. So the big issue is how they pay for it. It's not that they're not going to do it. It's possible that they could push it forward and fund it a little bit at a time instead of doing a big funding fix. But ultimately, they will figure out, they won't just push it down and push it down. They might do that a couple of times, but eventually they're going to do a permanent fix on Medicare solvency. One of the things that they will not do is cut benefits. They are looking at exactly the opposite and increasing benefits. So they're cutting benefits is not even a remote part of the consideration of what they might do. They will look at whether they want to increase the current payroll deduction that people pay in their paychecks. They might look at removing or changing the wage limit on the Social Security wage limit, where deductions for Social Security stop at a certain point in the year relative to a person's income. Or the other thing they could do, we hope they won't, but and we will oppose it if they try to, but we don't want them to take money from the employer plan tax exclusion, because that could cause some unraveling of employer-sponsored coverage. They'll find the money somewhere, or they'll take it from a combination of places. They might change the way some claims are coded, but again, they're not going to change anything significant relative to the program benefits itself, and in fact are looking at this increase in benefits. Some are saying that they will pay for part of Medicare solvency by looking at prescription drug issues and doing something really aggressive on that. It will be hard for them to do something there, and they will be addressing prescription drug issues, but a lot of those are kind of partisan in nature. So Republicans are not going to vote for it if they think it's anything to do with price controls. So you can expect a lot of partisan bickering, but they will get some things done relative to prescription drugs. And actually, President Trump his administration worked a lot on that, but their hands were kind of tied as to how far they could go with it, because they could only do things that changed Medicare Part B. So one of the big things that we'll probably see pass first is to allow the government to negotiate the Part D program, which makes a lot of sense when you think about it. And and I'll use this as an example relative to Part D. What a lot of people don't realize is the premiums that Medicare beneficiaries pay for their Part D coverage only represents 25% of the actual cost of Part D. So the government pays 75% of the cost for Part D. It's also Part B. The premiums that people pay for Part B don't really cover the cost of Part B. It's not taken out of your the payroll deductions either. It's taken out of general funds. That's why the program is theoretically could become insolvent. It won't, as I said. Don't worry. They will fix this. But there's a lot to watch on this. So really watch really closely on this. Really watch closely how they decide to pay for it, because that can have implications on other things. So watch that closely. By the way, some people usually ask me, so I'm going to answer this question before you ask it. Wouldn't it make sense to make Medicare eligibility line up with Social Security eligibility, in terms of, people are not Social Security eligible at 65 anymore, for example. But actually they're looking at just the opposite and making it go lower. So I don't see any indication that would happen. Okay, I'm going to keep going here. So I told you that Congress is going to respond. Let's look a little bit further in how they might respond. So I know it feels like we just had an election, but we actually have another one coming up next year in 2022. It's a midterm election. Usually the, uh, in the midterm, the party that's in the White House loses seats, at least in the House. And right now, our margins in Congress are the closest we've had since 1896. So, what those close margins mean is that they're very aware that any decision they make relative to Medicare can have an election impact on them. So, they're unlikely to do any great big changes. They'll probably, as I said earlier, they'll probably just do enough to extend the Medicare Trust Fund to get past those midterm elections, and then we will and we'll see what they do with these buy-ins or changes to eligibility, and adding that in or adding some of the new benefits. I do think in their next reconciliation bill they're going to add some benefits to the Medicare program. It's just gotten so much traction lately in terms of the discussions relative to that. I think that they will do that, and that'll be before they address the solvency issue. And then the last thing I want to talk about just a little bit on the Medicare Plan Finder. You know, I know that we have so many great workarounds that have been provided to you as a result of, your relationship with Cornerstone. But we did work really closely relative to with CMS on the Medicare Plan Finder. We actually were working with their programmers every single week. We've gotten a lot of things modified on that, and there are a couple of more that we hope that they will, of changes that we hope that they will modify relative to this year. So if you still use the Medicare Plan Finder, you can expect a few more changes this year. We still work with them on what those changes will be. We work with their IT people to try to make sure that they work effectively. But I know you have a great workaround now, and hopefully that has been useful to you. So I want to, we're going to take your questions in just a couple of minutes. I've been looking at some of your questions popping up on the screen, so I know we have a few. But I do want to talk just for a second about NAHU and just reiterate that we are your professional association. We represent you before Congress and the administration. You, as a specialist in the area that you're in, should be a part of a professional association. It's quite inexpensive. You probably spend more for wherever you buy coffee or your soft drink or whatever it is that everyone has something that they buy all the time. Starbucks, some of you, maybe other things. And you can pay it monthly and it's quite inexpensive. So I highly recommend that you do that, because you're going to get a lot of information from us that's going to really give you an advantage with your clients, and you're going to support the industry that supports you on a continuing basis. We have an entire Medicare web portal for you, including we do have the ability to take your certification through NAHU if the carriers that you do business with have signed on with us. A lot of them have, but not all of them have. So I encourage that. We have Medicare summits across the country. We have an FMO council, which Cornerstone is a member of our FMO council, which is an exclusive and a prestigious council to be a part of. And so we've got a lot of benefits for you just as a result of being in the Medicare business, and we're adding more all of the time. We also have a lot of other information that will keep you up to speed. We know your clients don't just ask you about Medicare issues. They ask you about everything. Once they trust you, they ask you about anything possible. So it's important that you keep up to speed on cutting edge information. And our Washington update really allows you to sift through all the things that you might be hearing on television and radio and your other news outlets to try to figure out what is actually accurate. And that's what we put in the Washington update. A lot of the things that you might see on your other news outlets, they may not be inaccurate, except that the fact that they're incomplete makes them inaccurate. They don't really tell the whole story. And then we have, if you like podcasts, we have a great Healthcare Happy Hour podcast that I suggest you listen to. We broadcasted every week. It's on iTunes, Stitcher, or you can get to it on our website, or you can actually click on our Washington Update on Fridays and get it there as well. And it's on Spotify. Some of you might have Spotify, but it's great inside the Beltway information, but not boring. It's in plain English still, so that you can really get a lot of up to the minute information. So I can take whatever questions we have now.
Well, great. We did have a number of them come through, Janet, here, so I'm just going to start to pose them to you. And I think some of them you touched on as you were going through your presentation, but I'm just going to kind of start with the earliest ones and kind of work my way backwards. So we had the question come in. Yeah, you may be covering this, but curious to know if the insulin savings program will continue and if there are any other prescription savings related programs for 2022.
I don't know of any new ones other than the insulin savings, and then we are trying to fix the pump issue. So
Okay.
those are the main ones.
Great. We had another one come in not too long after that about how that they affect the insulin costs, some of these changes that you went over. But I think you're talking about that the insulin pump kind of helps answer some of that stuff. So that's good to know that program's here to stay for a little while. So the next one we had that come in, can you address hospital price transparency and whether we are likely to see it anytime soon?
Well, the hospitals are supposed to be complying. If you look at all the reports, a lot of them are not complying or they're partially complying. The penalty for non-compliance isn't too horrible on them. I think a lot of them are trying to the extent that they think it's feasible for their business model, and then waiting to get slapped on the hands. If you look at the ability of the enforcement arm to actually enforce their ability to enforce for all of the hospitals out there is pretty tough. I'm being really honest here. I don't know. The penalty is just not that bad, and some of them just kind of roll the dice and partially they kind of comply to the extent. Some of them really are belligerently non-complying in certain areas because they really feel like what they've been asked to do is actually bad for overall pricing. And they're reluctant to release competing negotiated rates because they're afraid it'll be just a race to those that have the lowest rate. But everyone will be try to get the lowest rate. Do you see what I'm saying? And the penalty for them, so they'll show some things, but not everything that they were supposed to, if that makes sense.
And sorry, you're saying that, I'm sorry, I'm just taking what you just responded to it and asking my own question, I guess. So are you saying that you think hospitals are worried about that individuals be less worried about care and more just going to the place where they can get it done the cheapest?
Well,
or that's what the hospitals are worried about? Yeah.
Well, they're afraid that if they release all of these, what are actually rates that were supposed to be proprietary rates, that it'll be a race to the bottom on how much they're being paid. And that, remember when I talked earlier on the public plans about they don't want everyone to be paid they don't want all of their payers to be paying the lowest cost. And they're concerned when they release all that information that someone else will say, well, look, I see that you're paying, carrier A this, and that you're accepting this from them. Why don't you accept that from me too? We want that too. And so they're worried about their revenue streams. And so they're saying, relative to my revenue stream, this penalty is less expensive.
Well, that makes sense. Okay.
So it's not they're not releasing anything. Most of them are releasing something, but maybe not the full breadth of what they're supposed to.
Yeah. We had a question here that just kind of, and a couple questions on this kind of, but this one was just kind of, you were covering a certain chart and we had an agent ask if it was going to be available as a handout. Can we make your presentation available to our attendees?
Yeah.
Okay. Great. Well, we'll try to get an attendee count here for this meeting, and we will try to get that around to anybody that's on here and and listening. So thank you for everybody's willingness and intention to get that. We had also a question kind of come in that, what is a global, I think during your presentation, you mentioned a global budgeting system.
Yeah.
And she was just kind of curious what that was and kind of the emphasis on global.
Yeah. So I don't want you to think that, that we're opposed to budgets. Obviously, people have to have budgets and not overspend. But what a global budgeting process can do, and what a lot of them do, is they tend to be underfunded. If you had a global budget that had enough money in it, this is not going to be a problem. But if they're basing everything on an underpriced system and they're creating their budget from underprices, then it's too small. So here's how it works. Under a global budgeting process, there would be in the United States, because we're big, there would be these regional global budgets that would be created, and they would have to cover all of the healthcare that's delivered in that particular area. And then inside that global budget, big hospital systems would have their own separate budget. And if I want you to think of how many hospital systems have doctors that are a part of their system. So big medical systems that include the hospital and the providers that work for them and so forth. So every provider that worked for them would be a part of this global budget for that hospital system. And with what we've seen happen in other countries that have this, if they use Medicare pricing as the basis for the creation of that global budget, then they will run out of money. So in order to avoid running before the end of the year or the end of whatever the period is, the quarter, however often they get it, and we've seen it happen in other countries over and over again. So what happens is they start rationing services. They decide which services are a priority and which aren't. So you might have, that's why you hear about the Canadian waits for knee replacements, for example. That's a great example. But what you don't hear about as often is how long you have to wait to get a biopsy for the suspicious lump. So it's just a delay, a huge delay in care. I know someone that was in the Canadian system. I talked to him very recently, and he said that he had a lump behind his ear, and that he'd gotten on a waiting list. And so, and then 2 years later, he's contacted about getting an appointment to go in and look at it. But at this point, he'd already done something else about. I think maybe he'd come down to the U.S. and gotten it removed. So you see what I'm saying? This is what a global budget does. Not because it's a budget, not even because it's global, because the way they're always structured, they're always underpriced because they're based on this low level of pricing that's too low. And so I don't know, does that make sense? It's like squeezing a balloon. Something has to give somewhere. And it's just, I think it would be unacceptable to us in the United States. We aren't accustomed to that.
Yeah, I don't think very many people would be happy waiting for 2 years to get something like that. I know I wouldn't. So
it's not everything. If you're having a baby or you go into the emergency room, they're going to take you right then. Yeah. And I know a surgeon, and I'm not just blaming Canada. It's not just Canada, but they're just an easy target because they're so close to us. That I know an orthopedic surgeon there. Who says, look, Janet, you can get anything in Canada that you can in the U.S. You just have to wait for it. Yeah. It's not that they're backward or anything like that. They have great medical care there. It's just that some things you've got to wait for because of these global budgets.
Yeah. We had the question come in. This is just from actually Paul on our side here. So, if the government votes to add dental, vision, and hearing coverage potentially to regular Medicare, do you know Medicare Advantage carriers receive more money maybe on that monthly basis as well?
To be honest, I doubt it. A lot of the people that really are in favor of that want it to say that people on original Medicare should be entitled to the same things as they can get in Medicare Advantage. If that makes sense. So yeah. It's possible that they could. It depends on the makeup of Congress. So if you In general, well, really, a lot of people of both parties like Medicare Advantage, but in general, there is this a faction that really thinks that original Medicare should offer the same kinds of choices, and that's kind of who's driving this discussion. But it could push some additional benefits also over into Medicare Advantage, and depending on how the makeup of Congress changes, funding could come in a few years, but not right now. I would highly doubt that.
Okay. The next question that we had was, can you please let us know what direct contracting is and how it will affect the FMO agent model?
Gosh, it's used in different contexts. I'm not sure how it'll affect the FMO model. There is. I will mention something that I think is important. It may not be what this person is asking about, but we had a rule that came out under the Trump administration that opened up the individual market to allow more direct purchasing of qualified health plans and eligibility for tax credits directly through carriers and also through web brokers. And that may not be what they're asking about, but I do want to let people know, and I didn't mention this earlier, that has been rolled back. So that's not going to be permitted. They want people to go through the exchanges. I don't know if that's what they're asking about. So I may have to have more information about the question and maybe answer it later.
Okay. Well, I guess, Charles, if you don't mind me saying your name, just let me know if you'd like me to if you can give me some more information behind that, I can pass it along to Janet. We'll see what we can find for you. So the next one that I had come through is, is NAHU, what is NAHU doing to push, CMS, HHS to start pushing or start punishing call centers from who are illegally calling seniors without consent to contact?
Well, when we know of violations, we provide the information, and as you can as well. So if people are doing, your two sources because Medicare Advantage and is regulated through the federal government, CMS is the regulatory authority. We don't go and look for the people doing it. But if we hear of things that you pass on to us, we do pass it on to them. We don't say, "Oh, what action have you taken yet?" Because there's so much red tape at CMS that we have to turn it over to their regulatory division, which we do. And I will say that just remember that Medicare supplements are regulated at the state level. There's also departments of insurance. So sometimes when something's going on, even though it's technically a CMS issue, we go through the insurance commissioner if it's particularly egregious, and they are helpful in getting to, because they coordinate with the regulatory people at CMS. It's helpful. So even though I hope I'm making sense. Even though they're not the direct regulator, we work really closely with insurance commissioners. Because they are, the primary regulator of most insurance, even though technically MA is regulated by CMS.
Okay.
Confusing, but
No, I
so my point is, if you see something as a broker, you don't worry that you can't contact your insurance commissioner. Don't think that it won't do any good. That's the point I was trying to make, and that's what we do often, in addition to sending it over to CMS.
Okay, great. One agent was just kind of seeing kind of some pain points with the conflict between employer HSA contributions and Medicare. Was there anything that NAHU was maybe reviewing or anything in the works to address that?
Yes, we have something that we've been working on for a while. So this has to do with people being able to continue to make contributions if they are still actively at work once they once they're eligible for Medicare, once they're enrolled in Medicare, even Medicare Part A. Theoretically, they're not supposed to contribute to HSAs, which is silly. we are working on that. We have to, the legislation that had been introduced in the last Congress to address that has not been reintroduced yet, and we're working on getting it reintroduced. What they have to be careful of with that is that they don't create a double tax preference in there, so that they don't have things that are tax preferred, the same dollars tax preferred twice. But we are working on that. We have a lot of interest in that from a couple of key people, particularly on the House side. But we have not found our champions on the Senate side yet this go around, because the ones that we were working with have, one of them retired and the other one was not reelected. So it's in process, but I'm not going to say that one is quick. Whereas I said that COBRA's credible coverage and the observation status were moving quickly, they are, but that one's going to take us a little bit longer because we had to start over again with the new Congress.
Gotcha. I think that at one point you even heard me talking about just kind of credible coverage or maybe prescription drugs, and a question came in, has there been any talk potentially about making just VA benefits credible coverage, not just the Part D part of that?
Yes, we have been talking to them relative to that, and it will have to do with the cost. So everything that you want to do, it creates a score for it, and it depends on whether they want to do it all at one time or in pieces. We actually have had a lot of conversations with them about the VA benefits.
Oh, good. The next kind of just kind of more about the employer benefits, not to piggyback off that HSA, but just in general, has there been any talks about maybe expanding on allowing employers to pay Medicare premiums and plans for their employees?
Not too much discussion about that, and the reason why is it's kind of been wrapped up in this discussion of this, the buy-in, the Medicare buy-ins and the Medicare eligibility, because that's where a lot of this conversation is revolving around, and employers are trying to figure out. I mean, not theoretically. I mean, it could definitely cause a market disruption if it's not structured correctly. So there's a lot of question about, do employers want this to happen or not? Because obviously that is an age group that's expensive for them to have in their plans. Even no matter how great we've taken care of ourselves, the older you get, stuff goes wrong. And so it's a more expensive population. So there's a group of employers, and I don't want to say it's a majority, who think that they might like this idea of a buy-in. And they're kind of the ones that are driving this discussion about, can we pay something to put them into this other program?
Yeah. Okay. Now I just
some people call that dumping. Okay, and so there are market implications of doing that, and both on the Medicare program, but also on the potential on once you have to create. This is a really important question. You have to create an equal opportunity. The employers can't just pick, oh, I want to offer it here or there. It will be everybody that's in that classification will have the same opportunity. Some of them will not be sick. Some of them will be some they would have been better to keep in their group. And so the potential is it can backfire on them to do this. But we're skeptical about this one, to be honest with you.
When you phrase it like that, it kind of makes sense. So yeah. I just want to let you know, I mean, we had you for an hour, but we have a number of more questions that I've not gotten a chance to ask yet. Are you okay if I keep asking questions, or I didn't know?
Yeah, we can keep going. I'll tell you when I have to stop. We can go.
All right. Thank you. All right. So we were very engaged today, which is just absolutely great. But you had, I think there at the end, you had mentioned your Washington Update newsletter, but we had just the question, where's a good online site that they can periodically review these issues?
Some of the information on our website is open if you're not a member, and then some of it's firewalled. So, but I really recommend, you all should look at how inexpensive it is to be a member, because then we're going to be pushing it to you, and you'll get all the things that are important. Well, you'll just receive that.
Yeah.
So I would, if you're asking me what's the best news source, I listen to different sources because I want to know both sides of an issue. So for some of you, I don't want you to think, well, if I only watch CNN or I only watch Fox or I only read Politico or we read all of them, and then we have our direct sources from the Hill, and we combine all of that and synthesize it together. So there is no one place. That's unless it's us, because otherwise you have to read multiple sources. They all have a different kind of slant on the same information. And then if you get a direct feed from the government, you get more information than you want, and then it's an all in legal gibberish. So we sort of synthesize it out and put things in plain English so that people actually can figure out what's going on. And then you can also listen to our podcast. It's called the Healthcare Happy Hour. You should listen to that. It's on Medicare and other healthcare topics. So I think that you would like that.
Well, great. I know we had one question, just like why didn't more carriers accept like the NAHU AHIP training? And I know that, talking with Tim, you mentioned Cornerstone's part of that FMO council, that's under review, and we're trying to get as many carriers to do that as possible. So, I mean, I know that some of it's just a timing thing, and I think most of the carriers are headed in the right direction of accepting that NAHU training in lieu of AHIP. Maybe even looking as forward as early as next year. Would you agree?
Yeah, we've got some of them. It's just a matter of, they've got a lot of red tape. They're big, but we have a lot of carriers in there already. So it just depends on who it is that you place business with as to whether or not. And I will tell you, we have a number of people that take both trainings. And the reason for that is the NAHU training includes CE, and it also includes 12 months of education, monthly education free, that comes along with it. So it's really a super value. A lot of people like the NAHU training because you kind of walk away with actually something that wasn't just something you had to do, but it was things that'll make you better at what you are. Our training was created by brokers, so with the idea of helping you be better at what you do and giving you the mandatory thing that you need to do.
Yeah. Now we had another question come in, and I got to be honest with you, I've not even heard of this. So I mean, this might be a quick answer potentially, but maybe you can shed some light. But we had an agent say that they just read about Medicare Part E last week, and other than, is it maybe just another idea, or is it any likelihood that this will move forward? I'm not sure.
I hope it doesn't move forward. Medicare Part E is a public option. It's not Medicare at all.
Oh, okay.
It's not.
Gotcha.
It's kind of a cross between a Medicare buy-in and a public option. It's merely a public option. It's very broad, and it would have a lot of market. I don't think politically it can happen. It's really not good, and it would disrupt current markets, and it would be offered alongside individual market coverage, and the providers would be paid Medicare rates. It would be for the individual, small group, and large group market, and it would require. The reason the market damage would be so bad is that it would require providers that participated in the regular Medicare program to also participate in that program. So it's not good at all. I don't think it has I don't think politically it can happen, but we have to be careful. That's what it is. It's not really Medicare. See how confusing it is? It's called Medicare Part E. It sounds just like another letter, right? On the others, and it's not.
Okay. Interesting. We had, I think that you kind of touched on this briefly in your presentation as well, but there was some discussion of potentially reducing that Medicare beneficiary age to age 60. Was there any traction on this as opposed to the Medicare for all? I know that you talked about, lowering that requirement. Yeah.
Yeah, there's a lot of traction on that. Of the things that are out there, that's it's possible. Now, there would be a cost associated with it. There would be rules associated with it. We don't know what they are. We don't know if it would be, if the people that are younger than 65 would also be someone that, an age group that brokers would be allowed to work with. We don't know whether it would only be original Medicare that would be the eligibility, or if it would include Medicare Advantage. None of that is revealed at all. So it may not be a good deal for you. It might be something that would actually be bad for you, because people would enter at an earlier time and not be someone that you would have the opportunity to work with as a broker.
Yeah. Let's see here. We had a question come in. What is the best resource for an agent to file a grievance? I know we kind of talked a little bit about the call centers and how that was just such a pain point for some of our agents last year, the Joe Namath commercials, that sort of thing. So if they see something like that happening this AEP, what would, I guess you're saying before in your response, maybe the best thing is to maybe pass that along to you guys as well, or
you can pass it to us if you want, and we will pass it on. If you're a member, you can.
Okay.
Well, if you're a member, we'll pass it on. But we're going to look at any. If you're not a member, we're going to look at it too. But don't forget your insurance commissioner, because your insurance commissioner has a lot of leverage with CMS. They work very closely together. So don't forget them either. People don't think about their insurance commissioners too much, but they are really important in the whole process of the regulatory process. And when I first started off in this industry, which was a really long time ago, there was a much bigger separation between CMS and the insurance commissioners. And over the years, as the state federal systems they've not come together, but there's just much more times when they have to coordinate. Then they've started working together a lot more. For example, if you go to a National Association of Insurance Commissioners meeting, you'll see all kinds of people there from CMS. There's a lot of coordination.
Gotcha. This is just another NAHU question, but does NAHU have professional development courses that can apply toward agent CE requirements?
Oh, yes, absolutely. We have a multitude of certification courses. I talked about our Medicare certification, but we have all kinds of courses on every aspect of, health insurance that you can think of, from things about the Affordable Care Act to things about HSAs, HRAs, and ICRAs, and all of that. If people are interested in that, we have a whole course about the single payers issue. And it's a certification course. They all have CE, and you can work toward our industry designation, which is the registered employee benefit consultant. But you can gear it all toward Medicare and kind of individual market stuff too, if you want to, or you can mix it up, which I recommend they mix it up. It's always good to know about different things, and it's just dependent. It's on our website under professional development. You can go look, and there's a ton of information there. I would say, that our professional development is right up there with our advocacy, our legislative and regulatory work. So it's a huge part of what we do at NAHU. And then we also have stuff that's not doesn't provide CE, but provides you a lot of information. So we have free compliance webinars for our members, and also running the business webinars, which are also really interesting, also free.
Well, I kind of have a compliance question here that came in from one of our agents as well, just since you mentioned that. So, I think that they must have seen something last year where a carrier was, doing an advertisement, and they included an offer of an incentive to call them, and it's more of a question of, why can carriers advertise that when agents can't, what I mean, for an offer to incent, what I mean?
Okay, so I don't want to get too far in the weeds, but here's why they can do it. So the way CMS looks at it, CMS contracts with the carriers relative to Medicare Advantage. The agent is a contractor of the carriers. So CMS puts together guidelines, but their primary contracted entity is the carrier on MA. Does that make sense? So that, and part of the reason, and so the rules, CMS's guidelines are a result, and I call them guidelines. It's the marketing rules. The marketing rules are a result of some of the very things that several of you have asked about today, where people break the rules. And then what happens is the rules become more difficult and they're imposed on everybody because a couple of bad actors didn't do the right thing. And this is the way government entities respond. They create rules that are probably more than what was needed to address the problem. Sometimes it's hard for them to identify who the people are that are breaking them, and so they impose the rules on everyone. That's the honest answer. I know you probably wanted a different answer, but that's what the real answer is. And so sometimes we pay the price for. That's why it's important for people to know what the right thing is that they're supposed to do, to be affiliated with a great FMO like Cornerstone, and to be a member of their professional association. I have to tell you that some people are, criminally bad actors, and some people just don't know better, and they don't know that what they're doing is wrong. They don't know. And it's because they didn't get all the information that they should have been given because they were not treating it as a professional career. That's why you join a professional association, and that's why you affiliate with somebody like you all, and because you've got to treat what you're doing as your profession.
Well, I want to just make one more shameless plug here. It looks like that we talked about the slides becoming available since you give us that okay. We are going to make, if you go into the expo hall, Cornerstone Senior Marketing has our own booth this year. There's lots of good information. I encourage you to go out there and chat in there as well, so that we can interact with you directly. But under our handouts section, we're going to make Janet's presentation slides available in there for you to be able to just grab and download, and that should be out there very shortly. So just so that you know, and if there's any of this information that we went over today that you want to review again, I mentioned in my call at 9 o'clock that these things are being recorded. We're going to make them available on demand for the course of the road show. So this should be up to be able to watch on demand as well, probably starting tomorrow morning, for any of you that want to share this or come back and watch it. I know that there's a lot of questions that I didn't get into, but we're already about at 11:15, and I want to be kind of cognizant of Janet's time. So, I really appreciate everybody's interaction. Great things in the chat, great questions coming in on the Q&A. I'm sorry for anybody that I didn't get to those questions. We really did try to get through as many as we could. So thanks so much, Janet. It was great as always.
Thank you. Thanks. Thank you all for attending. I appreciate it.
Yeah, thank you, Janet.
Thanks.
All right, well, we'll go ahead and close it down. We're back on at 1 o'clock with Don Runge, kind of talking about, leads and how to convert them. So I welcome you back. I'm on at 3 o'clock to talk about Medicare Center. So this is only day one, everyone. We're very excited about the road show and everything we're being able to bring. So we look forward to seeing you later. Thanks a lot and enjoy your day.